are they now in terms of assets?
So BlackRock is currently on almost 6 trillion, and Vanguard we're looking at about 4.7 trillion at the moment. But that is going to rapidly grow. Looking at the average growth rates over the last 5 years, we could be seeing Vanguard at more than 10 trillion by 2023, and BlackRock hitting that mark a couple of years later at 2025.
How will this impact the asset management industry? This is huge.
It is huge, and that's a very good question. I think at the moment we're looking at two key areas where we're likely to see some impact. The first is market efficiency. So what does it mean for two huge passive investment giants to have so much money? Does that change the way in which price discovery happens within the markets? The second is corporate governance. If you have two large managers owning very significant stakes in many American companies, what does that then mean for corporate governance?
Right, now what about BlackRock and Vanguard and their patriarchs, if I can hesitate to call them that, obviously Jack Bogle at Vanguard and Larry Fink at BlackRock. Where do they stand on their respective expansions?
So Bogle actually sort of made a comment last week at the Council of Foreign Relations talking about Vanguard and BlackRock and State Street as being oligopolies. His word, not mine. Sort of looking at how significant the stakes in American companies have become. So I think that they are aware that they are growing very rapidly, and obviously to be prudent they need to make preparations for what happens when they are managing more money. But they're also very keen to point out that at the moment we haven't yet seen any definitive negative impact on either market efficiency or corporate governance. If you do look at the proportion of passively managed assets worldwide, it's still about 15%, which isn't that huge at the moment, though we are seeing it bigger in the US.
Huge opportunity for growth, but my question would be, why aren't there more people in the fund index tracking business here?
Well, I think the thing is that Vanguard and BlackRock have really done such a great job of actually doing better than their competitors. I mean, we do have a number of players in the ETF world and in indexed investing more generally, but BlackRock and Vanguard have really managed to push their fees particularly low. We've seen such fee compression that for investors looking to put money to work, why would you choose a fund that's more expensive if you can get one for 3 or 5 basis points from Vanguard or BlackRock? Added to the fact that they're such large asset managers, their products are available on so many platforms. You can buy them on online platforms, through the wirehouses, through robo-advisors. It becomes very difficult for smaller, newer players to actually get a foothold.
So this is all fine and good while the stock market is going higher and ever higher and grinding higher and records and so on. What happens, when it doesn't anymore? Do hedge funds suddenly come back into fashion, and do people start moving away from passive index funds?
Well, I'm sure the hedge funds hope that's the case. It remains to be seen. I think passive is probably not going anywhere soon. The low fee that you've been able to get by having index tracking products is something that's very compelling, regardless of the market environment. That being said, active managers have had a really tough few years. We've seen their performance really struggle under the current sort of environment of depressed volatility. If we see volatility pick up, active managers finding more opportunities to outperform, then we could see some of the money that's been going into passive start to go back towards active, but they've got to prove their worth.
So what are the challenges that passive faces going forward?
Well, I think that the fact that trying to stand out against the active managers, if active do come back, I think for passive it's going to be trying to find room to grow. If you look at the exchange traded fund market, for example, we're at 3.3 trillion in the US and about 4.5 trillion globally. So the question there really is kind of, where is the new areas for them to grow? More than 2,000 products in the US. Which part of the market hasn't yet been indexed? Most of them have. So if I'm trying to find new areas where they can create indexes, create products and sell to investors, that's going to be the challenge for them to continue growing.
Just one last thing, Rachel, who's number 3 and how far are they behind?
So State Street's number 3, and they were obviously one of the first, they were the first provider of exchange traded funds. They've slipped a little as Vanguard and BlackRock have kind of grown up in might. They're around, I think, slightly less than 3 trillion at the moment, so still fairly far below kind of the Vanguard 4.7 trillion.